So, I mean, with Bitcoin, we have seen a major breakdown, and that was below about 18,300. It was a support level we'd watched for a long time, and it was holding for a long time. And now, of course, we have this breakdown, but we wanted to make sure to take a step back, which we always do also with the equity market, and look at the very long-term posture to just try to determine if this bear market cycle is still a cycle or has it become something that's more of a secular trend. And as it stands, looking at that monthly cloud model, which is also called Ichimoku. It's a model that was developed in Japan. It's really, really widely used and followed in Asian markets, and also anything that has sort of a deep global liquidity to it, FX being one of them. It's really adherent to this cloud model. And so for the cloud itself, you see that it rises over time still, and that frames what we believe to be a secular bull trend. The catch is, of course, that the cloud is quite thin, and that's something that sometimes indicates that it's easier to break. So we are not highly convinced that it's going to hold, but it does tell us that still Bitcoin can be considered a secular bull trend. Now, the secondary support from that breakdown below that 18,300 area is about 13,850, and a decline of that magnitude does appear likely over the coming months based on the breakdown that we've seen, unfortunately. But it would not necessarily mean that that cloud-based support is in jeopardy. So it wouldn't, as much as it's a pretty significant percentage decline potentially, it may not mean that we've entered this secular bull or bear trend.